What's up, everybody? Jasprit Singh here, and we are going through an interesting transition period in our economy. How do I know? Well, Walmart tells us. Yesterday, Walmart put out an interesting statement about their company and their forecast about the economy, and it tells us not just what's going on with their company, but what you need to be paying attention to in the economy, inflation, and what's coming ahead. So let's dive right into the numbers, because a few months ago, Walmart came out and said essentially that they expect their profits to drop pretty big because of the slowdown in the economy, because of all the high inflation. Well, over the past few months, they've been doing a lot of liquidation sales because they had all this extra inventory built up because they were buying a whole bunch of stuff due to all the demand during 2021. And now because of high inflation, people didn't have money to buy all this extra stuff. So they've been putting it on discount and they've been seeing a big surge in sales. And so what they said is that over the next year or through the end of this year, they expect profits to fall, but they don't expect profits to fall as fast as what they expected. They now expect profits to fall between 9 to 11%, where before they were expecting profits to fall between 11 to 13%. But this is where it gets a little bit more interesting. And if you're wondering why I have a weird tree in my background, it's because I'm in California right now. I was just in Manhattan. Now I'm in California. I'm here because I'm about to go on a couple interviews. I'm going on Tom Bilyeu and Lewis Howes' show later today. So I'm just making this quick video for you before I go on these shows. That's why my setup has been crazy. My travel has been nuts. So I appreciate you bearing with me. But the Walmart CFO talked about three different things. First, he talked about the state of the US consumer. And what he said is that it seems that consumers are still relatively healthy, although there's been a change in consumer behavior patterns. Let me read you what he said. First, he said that instead of consumers buying things like deli meats and some of that higher end quality stuff, that's what they're saying is quality, not what I'm saying. So but what he said is they're seeing a switch where people are still spending money, but they're not spending money on stuff like deli meat. Instead, what they're doing is they're turning to things like canned tuna and canned chicken and canned beans, because those products, those canned products, are skyrocketing in sales. Those units were up over 25% over the last few months. Consumers are buying smaller to save money, and they're being much more conscious in what they buy because they're spending more money on food rather than discretionary items. So because of that, the consumer is still strong because they're spending a lot of money, but they're spending the money on things like canned food as opposed to less of the real food because that's what they can afford. The second thing that he talked about in terms of inventory levels is that Walmart, along with many other companies, are facing this issue of super high inventory. So companies that were seeing the 2021 economic boom were like, we need to keep up with all this extra demand. And in order to do that, we want to buy all this stuff. That contributed to a massive boom in the economy because now Walmart, for example, was buying a whole bunch of things. This was really good news for wholesalers. Now, wholesalers had to buy more stuff from manufacturers. So it was really good for many different parts of the economy because now manufacturers were getting all these orders. And now it took a while for those orders to get processed. They're still backlogged because of all the supply chain issues, but Walmart is still facing an inventory issue. And what they're saying is that this issue is caused primarily due to inflation, and they expect this inventory issue to continue through the third quarter, and they expect it to finish and fix itself with the fourth quarter. So they're talking about the supply chain issues, and they're expecting that to get fixed on the fourth quarter. And the last thing that they talked about had to do with back to school shopping, because this is the time of year now where parents are shopping, getting backpacks, pencils, papers, notepads to get their kids back to school. And what Walmart says is that while the back to school shopping is not super exciting, it is encouraging. It was an interesting way that he phrased it, where he said that it's okay, it's not great, but it's also not bad. So kind of gives some encouraging guidance as to what's happening on the economy. But this is now where things get even more interesting, because now it gets into the real meat of what's happening in the economy, because then he talked about why consumers have had the ability to do more shopping, not just for things like canned chicken, canned tuna, and canned beans, but for the school supplies. According to them, the reason why consumers have been able to do more of this type of spending in Walmart, where he says the consumer's healthy, is because of gas prices. He says that gas prices have fallen quite a bit, and this has given people the ability to now go out and shop. right? We've seen the drop in inflation. But now let's dive into that because I haven't talked too much about gas prices recently, but what's causing the drop in gas prices and where gas prices could really be. Now, we have covered this in Market Briefs. Market Briefs is my free financial newsletter. If you haven't joined it yet, you need to join it. Market Briefs is an easy way for you to stay up to date on what's happening in the stock market, real estate market, crypto market, inflation, and the global economy. So if you are an investor and you want to stay up to date on what's happening in the financial world, and you don't want to spend hours reading Yahoo Finance, CNBC, Wall Street Journal, Forbes, and every other major publication out there, this is where Market Briefs can break it all down for you in 5 minutes or less. And the best part is it's completely free and you're gonna love reading it because it's so much fun. We keep it entertaining, we keep it light, but we also keep it extremely educational. So if you haven't joined Market Briefs yet, I'll put the link to how you can read it for free down in the description below. So now let's talk about gas prices because I'm gonna put up a chart here which shows oil prices between January 2022 and August of 2022. And what you'll see is that oil prices now today are back at where they were pre-Russia invading Ukraine. So oil prices have fallen pretty significantly off of their highs. However, now let's look at gas prices because gas prices, while they have fallen off their highs, they're not where they were back before Russia invaded Ukraine. So before Russia invaded Ukraine, back in January of 2022, when oil prices were also around $86 a barrel, back then the average gallon of gas was $3.23 a gallon. Today, the average gallon of gas is $3.93 a gallon. So why is that happening? Well, I called up a couple of friends of mine who own gas stations and I started asking them questions. And what they said is, for one, gas stations are making much larger margins today than what they were in the beginning of the year. And what he was saying is, nowadays, if you own a gas station, you're actually making money on the gas, which typically doesn't happen. Most of the times when you pump your gas in the gas station, they're making marginal money, if any money at all. They make their money from the convenience store, but now they're making money on the gas because they have bigger profit margins, just because they haven't pushed down prices yet, because they just haven't. Costs have come down, but they haven't pushed the price of their gas down. And what he's saying is it's a way now for gas station owners to kind of make up the lost costs, because in 2020 and 2021, they had lost a lot of money because nobody was pumping gas, nobody was going into the convenience store, and the price of oil had fallen so significantly. But there's also a second part to this, which has to do a little bit more on the government side. Because if you remember, the United States government had passed a bill to allow the government to dip into their strategic oil reserves to help bring down the price of gas. When the average gallon of gas was around $5 a gallon, that's when President Biden declared it an emergency. And that's when he started pumping a bunch of our strategic oil reserves into the markets to help bring down the price of gas. That's what we're seeing happen now. So the price of gas is also falling because the government is also pumping up the supply of gas, but that's a temporary fix. So we're seeing inflation fall, which is helping consumers spend more money. But what's causing it? Well, a big part of that has to do with the government. Now, that's not the only reason why gas prices and oil prices are falling. I don't want to say that, but there's one more aspect to that I do want to mention. Because if you remember back in June, I'm going to pull up the press release here. Back on June 22nd, 2022, President Biden also passed a federal tax holiday on gas. And I'm just going to read you the statement here, where it says that the price of gas has gone up dramatically around the world by almost $2 per gallon in America since Putin began amassing troops on the border of Ukraine. And so now, to help fight this high gas prices, because high gas meant that now the cost of everything had gone up so much, and that now you have to also pay more money for gas. So you're paying more money to fill up your gas tank, and then everybody, like even if you're buying fruit at the store, it's going to cost you more because there's a cost to deliver the fruit from the farm to the store. The transportation cost has gone up. So high gas prices trickle down to pretty much every aspect of the economy. And so to help alleviate it, not only were they releasing the strategic oil reserves, but second, they also enacted this federal tax holiday where the federal government charged 18 cents per gallon of gas for federal taxes on gas, and the 24 cents tax per gallon of diesel, which is no longer happening. It's a 3-month holiday, and this is scheduled to expire in the end of September. So high gas prices stopped people from spending because it was such a big factor to inflation, and people were spending so much money on gas that they had less money to spend in things like Walmart, stores, just regular shopping. Now, over the last month, we have seen inflation come slightly off of its highs. I mean, it's still record high inflation, but it's slightly off of its highs. But a major contributor to that was falling gas prices. What's contributing to the falling gas prices? Well, one part, not the whole part, but a part of it is the United States releasing their strategic oil reserves. And then second is also this federal gas tax holiday, which is also reducing the price of gas. Now, that being said, gas prices today are still higher than where they were pre the invasion of Ukraine, where oil prices were the same. However, what's going on? Well, gas station owners are making more money. They're trying to make up for some of the lost costs. And this is kind of the situation that we're in. So if we see the federal gas tax go back, and if we see the supply of oil start to go down again, that could impact the price of oil. So these are the things that you want to pay attention to, because yes, inflation is still high, and that is playing a major factor, not just into people spending, but into the economy, because Walmart is talking very openly about how inflation is affecting their pretty much month to month income, sales, and all of the reports and their projections about what's going on in the future. So this is what you want to pay attention to. We're covering this in Market Briefs, which is why if you haven't subscribed yet, make sure you do that. I'll put the link for you down in the description below. You mean if I just put $1,000 into this investment, I can double it in 6 months? Sign me up. Then you have people who have no idea what they're doing start buying, and this causes a big bubble. So you start to see these booms and busts in paper assets, which can create opportunity for the people that understand what's going on, but it hurts the people who don't understand what's going on. It hurts the people who are not financially educated.